We're in the middle of Jerome Powell's Fed meeting and his speech, and pretty much the Fed's leaving rates unchanged at 5.25 to 5.5%. And most surprisingly was that in their dot plot, the amount of cuts, 3 cuts for this year, is still intact. I thought the Federal Reserve might have revised that down to 2 for this year, 2 rate cuts this year, because the economy and inflation is still strong. But the fact that they kept the initial projection of 3 rate cuts for this year intact is helping the stock markets. And stock markets are at session highs today, with the S&P 500 just closing above 5,200. A few things that were notable in the summary of economic projections. First, GDP was revised up for this year. Unemployment was revised down, and core inflation was revised up. So all those things, and the fact that the Federal Reserve wants to cut rates 3 times this year, is bullish for the stock market. We saw bond yields plunge. We saw the dollar plunge. Obviously, the stock market's up and gold up, and Bitcoin is up a little bit too. This is good news, and Jerome Powell even hinted that the Federal Reserve might reduce the pace of selling assets off its balance sheet, known as quantitative tightening. He didn't give a timetable for that, but the fact he even mentioned that's good news. And overall, I think this is a good press conference so far. Look, he might say something towards the end that might spook markets a little bit, but as of now, the fact that the Federal Reserve is keeping 3 rate cuts this year intact and didn't revise that down to 2 is bullish for the market. And overall, this was a dovish Powell and dovish Fed, in my opinion.